Welcome to the Big Sky Investor Show. I am your host, Luke Anderson, coming at you from Montana. And I hope if you've joined me before, I hope that you've seen some value. I'm guessing you have. You've seen some value in what I've done with this show, what we've been talking about. And I hope you continue to continue to see value. And if you're new, I hope that you find value in this and that this gives you hope that if I can muddle my way through a podcast and try and muddle my way through explaining concepts or what I've been doing or whatever it is that we happen to be talking about, and it clicks for you, that there's hope that you can do anything. If I can make it through any of this, so can you. So we're kind of been sticking on the back to the basics theme, specifically in investing in business. And the last few episodes I've talked about different investing terms and concepts. And I wanted to talk about private money specifically. So there's a lot of different types of lending out there. There's a ton. There's money everywhere, and the way you go about getting it, I'm not going to address all of them. It would take way too long. And I don't know them all. Now, I'm just going to briefly tell you some of the ones that I know of, but then we're going to talk about private money. Okay, so there's commercial lending, right? You go to a bank or credit union. Now, the way that they handle the lending is different. That's another topic. But you can get funding or you can lend funds from them. Typically, they require 20 to 30% down, certain credit score, 2 years of pay stubs. They have their criteria, their safety, their risk management processes, right? Then you have hard money lenders. Now, again, I'm just talking about specific to real estate. I kind of paused there for a second because I almost brought up like venture capital and da-da-da-da-da. But really, it really depends on what you're funding. Like I said, there's so many different ways to do it. As far as real estate goes, there's hard money. That's also a very common type of financing. It is also typically the most expensive. So hard money lenders can charge points up front. So they charge a percentage up front as a fee. They can anyway. Not all of them do. Could be 1, 2, 3, 4, 5, 10% up front. And then they charge typically very high interest, and typically it's shorter term. However, you can find some that are longer term. So this can be good financing to get the deal done if you have a plan to refinance out within the terms, right? So if it's like a 5-year loan or a 3-year loan or a 12-month loan, you have this is really just temporary financing to get you by, right? I think I mentioned transactional funding before, where it's like you use the money for like under 30 days to like close a deal, or to specifically, I think in the context was for doing like an ABC close or double close. So you're basically using the transactional funding for like 30 minutes to an hour or a couple hours just to like close the deal and then recoup the money back when you sell it. So it's like kind of like a little mini flip. Anyway, so there's hard money lenders, very popular, especially with fix and flippers, but also you can do it with buy and hold. Like I said, short term, some are long term, but it can be very expensive on multiple fronts, higher percentages, points up front, that type of thing. It also can be very sketchy, at least in my experience in talking and researching and dealing with hard money lenders. There are, unfortunately, like in anything, there are shysters out there. And I've just found personally that it can be very easy to be duped into overpaying for the money that you're borrowing. So anyway, so there's that. There's also real estate funds. So that's really more of an investment tool, I guess, where instead of buying property, you would be investing your own funds. So I guess that's a different thing. but I do know guys that have set up funds and use the money that they've raised within that fund to purchase real estate. So then it's all SEC compliant and all that jazz. Very, very cool, but it can be very time consuming and very costly to set that up. So that's an investment strategy / lending kind of along the private money lines. Now, when I talk about private money, what I'm specifically talking about is having a relationship with an individual who has capital that they need to place in an investment and earn a return on. So sometimes private money is, people refer to hard money as private money, but that's not what I refer to. Private money is truly having a relationship with somebody who has capital and they need to place it, and you work out an agreement, a contract with that person, and they essentially become the bank. As an example, you have a buddy who you get to chatting with, and they've got $300,000 that they need to place, or maybe they just have it and they don't know what to do with it. Okay, but they know that they want to earn some sort of a return. They don't want to play the stock market game. They don't want to be in Bitcoin or Forex or whatever. They want something that's solid. Maybe they should buy property, but then they don't want to manage the property. Great. What if that person became a private money lender and you were able to borrow that $300,000 and go purchase a property, and then you just work out a percentage that makes sense for them and for the deal you're purchasing, and then it's a win-win, right? Now, it doesn't have to be that big of a money. It could be, personally, the lowest I've ever used was $5,000 or $6,000, and flipped a mobile home. So use private money to acquire it and then flip it. So it can be as little as that, right? I guess it could be smaller, but when you get into like actual true real estate, so mobile homes are kind of, they're dwellings, they're living, but they're not, I don't know if you'd consider it real estate really. So as far as real estate, really, you're talking 5 figures or more probably. But you'd be surprised how many people have capital that they don't know what to do with. They either flat out just have it sitting in an account and they don't know what to do with it, or it's money in an like a 401k, and they're not happy with the return it's getting, and they don't like that it's in a 401k or whatever. But they don't know that they can roll it over into, say, a self-directed IRA and then use the money in the self-directed IRA to invest in real estate. Obviously, investments, there's as many options as the universe is long, but that is a strategy specific to real estate, right? They can roll over their retirement accounts into an IRA and use that IRA to lend privately. And then all the gains that they get go back into the IRA as earnings or growth. So I'm not an accountant or anything like that. So if you're looking at that strategy, I highly recommend you talk to someone who can deal in securities, and you're an accountant and all the appropriate professionals to handle that. But it is doable, and it's very cool how it works. So anyway, that's another topic as well. Anyway, so it could be someone that has money. So private money could be someone who has money that they don't know what to do with. They could have it in an account that they need to roll. That maybe the best option for them is rolling it over into a different account and lending it out of that retirement account, like a self-directed Roth IRA. Another option is somebody who is going to be inheriting money or has inherited money that they don't know what to do with. Someone who is selling a second home that they own or have equity in and they don't know what to do with the equity. Someone who's getting a stock payout from their company, or maybe they're, there's a plethora of different reasons why people would end up with money. But the bottom line is that they have money somewhere, somehow, some way, shape, or form that is either making no return or not making enough return, or is in an investment type that is not to their liking or to their risk tolerance. Okay. So what you can do is you can have a conversation and you can build a relationship with this person. Never hurts to make a friend. And you can talk about options on how you can help them place that capital in better investments or into investments that are secured by real estate. Okay. So pretty cool. Now you do have to be careful because you don't want to go out there blasting out, oh, if you're an investor and you go, I pay X percentage, who wants to be a private money lender? SEC doesn't like that. That's why I say you need to make friends. You need to have relationships with these people. Okay. Now the first, what was I going to say? Sorry, lost my train of thought there for a second. So, you need to have relationships with these people. You need to know them. They could be, old childhood friends or buddies from high school or college or whatever. They could be coworkers. They can be newer friends. They can be people that run in similar circles that you do, whatever it may be. I've most recently been in conversations with some people that I wasn't coworkers with, but one guy did some projects for me. He worked for a different company, but did some work for my company. Another guy I met through a networking event, and we've just run into each other at networking events over the last several years, and just been really acquaintances. And we've built somewhat of some form of a relationship. Another friend is somebody I met in college. Like it's a variety, right? The important part is that you have a relationship, and really that's going to help on the communication bit. If you ever do decide to do business together, you need to have very, very strong communication with that person. But this can be a great way to fund things. I've seen private money used for, like I said, something as low as mobile homes, real estate, businesses. There's some people I'm looking at partnering with on some projects in the future that we would be looking at acquiring businesses strictly on creative terms and or private money. So that's pretty cool. So basically buying businesses that are highly scalable, going in, putting in new processes or shoring up processes and systems, putting in appropriate team members, scaling them so that we don't have to work in the companies anymore. Very, very cool. Kind of similar concept to real estate, right? You buy a rental property and you shore up some of the processes, work on the expenses and the income and get a good property management in there. And then bada bing, bada boom, it starts cash flowing, right? That's the goal, right? So kind of a similar concept just with businesses. So I'm trying to think what else I can say on that. That's really it. It's truly, private money is truly about building relationships with people who have capital that they want to place and secure it with whatever you're acquiring, whether that's businesses or real estate or whatever. Okay. And really you're solving a problem for that person, right? You're solving a problem for them, and they're in turn solving a problem for you. You need funding. So you go build a relationship. Yay, that's a win right away. Even if you never do business together, now you have another friend, another connection, another person to network with, another person to do life with. That's a win. But two, on the business side of things, you build a relationship with them, and you take the time to find out that they are needing a place to put capital, and they need to earn a return on it, and maybe they have an idea on what that return is, and you have a deal that can support that, and you offer it to them. Now you've just helped them solve that problem. And then if they agree, then they've solved your problem of needing funding for that deal. It's a win-win, right? And you get it all legalized, with the attorneys and title companies and all the appropriate people. Whether that means you guys form an LLC together, or which I would not jump to first, because then you're kind of married to the person. But you come up with a contract, and basically that person lends you or lends your business the money, and they become a lender, right? And you handle all the money through escrow and have the title company all handle it all, and or escrow company or whatever, so that you're not getting a personal check. And it just, you can build in processes and systems and safety nets so that everybody's protected and everything is kosher and legal, and everything's hunky-dory, right? And that's really it. I mean, it's not that complicated. I mean, the hard part is getting your mind wrapped around the thought that there is money out there and people want to invest with people. There's a lot. There's a whole niche. I don't know if niche is the right word, but a whole group. No, I don't know how to say. You know what I mean? There are a lot of people who aren't investing their money because they don't trust the system. They don't trust the stock market. They don't trust the financial planners, or maybe they trust the financial planners, but they don't trust the companies that handle their money, whatever it may be. They invest with people, right? That's why financial planners do so well, is because the ones that do well anyway, is because they build relationships with their clients. They build that trust, that rapport. Stockbrokers, similar thing. Good example. Have you ever watched the movie The Pursuit of Happiness? The Pursuit of Happiness with Will Smith, one of my all-time favorite movies. It's based on a true story. And the guy's a stockbroker, and I won't go into all the details. It's not just about him being a stockbroker. It's about his journey in life and like where he came from and everything like that. Or day trader. I can't remember exactly. Anyway, he works on selling stocks of some sort, if I remember correctly. But the point is that his business, was his ability to earn and to make sales, make transactions happen, was all based upon relationship. And he could not get his foot in the door until he started hanging out with people and building relationships with people, and remembering, I think that there was a time where like he remembered like some guy's kids' birthdays or something like that. Like, they went to football games together, they were at barbecues together, things like that. Now, doing that's what gets you in a good place. That's how you do business appropriately and ethically, is that you have a good relationship with these people that you're going to be lending from or doing transactions with. But you still need to formalize it with an attorney, and so that you can maintain those relationships. Then it doesn't hinder your relationship. It goes, hey, you've got money you need to place. I've got a vehicle to place it. Let's get with the attorney, make that happen. I'll have my attorney draft up paperwork. If you've got an attorney and you want them to look it over, great. And then whenever we're done and we're settled on that, we're going to send it off to the title and escrow company. And then when the time comes, you put your money in escrow. I never touch the money. It just gets divvied out appropriately. So there's third party handling it every step of the way. So then there's no funny business, right? So that's it. Pretty simple, huh? It's just getting over that hurdle. And I think that was what my point was with the Will Smith movie, was getting over that hurdle of realizing that there's money out there, and you just have to be able to go and build the relationships and have those conversations with people. But go out there and try and be their friend. Like, don't go out there just to make a sale. Don't be the used slick car salesman. That way of selling is, in my opinion, is dying or is dead. And you need to go out and build a relationship with people. So, okay, I've said that enough. Now, the other thing I was going to say is, on the money side, for a mental piece, there are venture capital companies, there are real estate funds, there is capital in the trillions of dollars that is not being put to use, that is meant for investment. Trillion with a T. Look it up. Do your research. There is, okay, to be fair, maybe right at this very moment, maybe it's only in the billions, but because everything fluctuates, right? Okay. There are times where there is trillions of dollars waiting to be invested that does not have a home to be invested in. It's a lot. So kind of taking this a different direction, creative financing. And I think I'll talk about this more in depth on a different show or different episode, but creative financing. So say you go and creative finance, really what you're doing is you're essentially creating a private money lender. They're just not pulling money out of an account. They're lending on their equity, right? So say they own the home. They have $200,000 in equity in it. You get under contract and they're financing essentially 100 or 90 or 80 or 70 or 50 or 10 or whatever percentage of their equity. They're essentially a private money lender. They're just not lending you cash. They're lending you on their equity, right? So essentially they're like a private money lender. So now on the flip side, on a different way to look at that, I know people that have helped people sell their home, get that equity, and then use that equity for private money, right? So you can do it a couple different ways. Now, my point with that, anyway, my point is just on the owner financing, creative financing industry. This is a new figure. I can't remember the exact number. I was trying to think. Excuse me. But it was, if memory serves correctly, just in the reported owner financing arrangements in America, it's something like a $60 billion industry. Something, I think it was like $64 billion or something like that, of real estate that has some sort of a owner financing on it in America. So just in real estate and doing the private money lending, quote, if you will, lending on the equity, just on the equity side of things, it's like $64 billion. And maybe I have that number wrong, but if it's wrong, it's low. Okay, I'm trying to be conservative here. I think it was higher. But anyway, this was coming from a guy who is like one of the most foremost authorities on note investing in the country. And anyway, yeah, it was. I was shocked and did a little research and found out what he was saying was true. I mean, there's a lot of creative financing that goes on, a lot of owner financing that happens. It's something, like I said, something north of $60 billion. Okay, it's a lot. Now, just imagine the amount of cash that is sitting out there. Money's everywhere, man. Another example, locally here, there is I'm trying to think how to say this without being too descriptive. There's a person in my community who has a business that's well known, and this business is well known because it's an eyesore, and it's rather trashy. We'll put it that. I'm not gonna say the industry or anything like that. This business is not well received by a lot of the community because it's an eyesore. That person happens to have north of, we'll just say, 7 figures of investment or of liquid capital. We'll put it, say, as liquid capital. Okay. If you met this person, you would never assume that they are worth 7 figures and have 7 figures in liquid capital. Never would assume that. You never, so my point is you never know. You never know who you're talking to and what they have. You never know what your buddy from high school has done with his life since then. You never know what your friend who you knew between the ages of, until you were 10 years old and then hadn't seen him for 20 or 30 years or whatever, and you never saw him past the age of 10, but you kept in contact somehow, whether it's by letters or smoke signals or your parents or whatever. You never know what they've done with their life. Just saying. I've had these conversations. It's amazing. It is amazing. And it's exciting because when you get to have these conversations and you find out that people have money and that they have liquid capital or investments, especially people it's super exciting because then it's like, good job. Like, you've done well. Like, I'm so excited for you. That's what I tell them because I am. And like I said, I'm their friend first, even if it's someone I haven't seen in 20 years. I don't care. I want to be their friend first. And I am legitimately excited that they have done well for themselves and made good decisions. And they've saved a bunch, or they inherited money, or they started a company and sold it, or they sold a patent, or whatever it is. Good for you. Then if we can do business together, great. And if we can't and it doesn't fit, that's okay. That's totally okay. Right? Or if it's not now, maybe in the future. But it's having those conversations, building those relationships, because you never know. You may turn down a couple $100,000 from somebody, or it's not the right timing for them, but you built a good relationship and then they referred somebody to you. Or you might help somebody with $5,000 or $10,000 and then they refer you to someone who has hundreds of thousands of dollars. You never know. So now I'm kind of babbling, so I better end it here. But I hope that makes sense. And my whole goal was just to explain briefly what private money lending is, kind of just go into that and why it has a place. One thing I didn't mention that I probably should is why you would use private money lending. So for me, the biggest driving factor is to be able to acquire things quicker because there's less processes to go through than traditional financing. Typically, you can acquire things quicker, you can scale faster, and I'm all about building a relationship, and it's a lot harder to have a good relationship with a bank. You really can't have a true relationship with an institution. You can just have a relationship to some degree, but it's with the people in that organization, and if they leave, they get fired, whatever, then you're back to square one. But with individuals, it's relationship based, and now you're helping an individual and impacting an individual's family, an individual's life. I love that. But on the business side, it just allows you to operate quicker if you've done the correct relationship building, things like that. It allows you to scale faster. It allows you to be more creative, get more stuff done, allow for more profitability, things like that. And like I said, then you look on the referral side of things like that. You can't really track on the benefit that has. So there's a lot of reasons why private money is superior for some situations. So just another tool in the tool belt. It's just one that I think has a lot more benefit than people realize. So I hope that helps give you just a very broad and brief overview of private money and kind of the things to be thinking about when considering it. Now, obviously, there's a lot more due diligence you need to do on your end if this is something you want to consider. I highly recommend you look at what the SEC rulings are on this type of investing so you just understand, even on a broad level. Like, so what I did to get started, in my understanding, the state, who oversees that? The Attorney General? Is it the Attorney General? I have to go back and look now. I believe it's the Attorney General or the Treasurer. I can't remember. It's escaping me right now. Whoever your state secretary or figure is that oversees the state SEC stuff or part, works with the SEC. Sorry, all my terminology is escaping me right now. But look on the state website, look at all the department heads and see who would be overseeing this area and see if they have any conferences that they do. So I went to a local one where our guy was traveling around to different major cities in Montana, and he stopped in Billings, and I went to one of his talks and he had some economic development people, some people from the SEC, some people from the state. He talked, he had some business owners, he had some lenders. I mean, he had a whole variety of things. And it was really interesting. I mean, there was a lot that I didn't need to know, but it was good that I learned the basics. So I understood like what the SEC was, what those regulations look like, why they were in place, that type of thing. Highly recommend you do the same. That was a great place for me to get started. So, and maybe it's a webinar. We're small enough and rural enough that sometimes people, they have to travel in person because some areas don't get internet. So anyway, so that's where I would start. I hope that helps. I hope you'll join me for another episode. Let me know what you think of this. You can reach me on all the social medias, all the major ones anyway. Social media tag or handle is at Luke John Anderson. John is Jon, not with an H. It's just Jon. That's what makes me unique. Luke John Anderson. Also, you can watch the videos of these episodes on the YouTube channel, The Big Sky Investor. You can also get that through my personal channel, Luke John Anderson. You can also shoot me an email, thebigskyinvestor@gmail.com. I would love to hear your comments, feedback, and so I can improve the show and improve what I talk about and maybe how I present it, things like that. Thanks again. I love you all. I hope you have a great week.